Welcome back everybody, and today right about now we are going to learn reversal patterns, right? All the reversal patterns that you need to know right about now that will help us to trade in the market. These reversal patterns, guys, it's a must. We must know them as price action analysts, because all these reversal patterns that I'm gonna present to you or that I'm gonna show you today, they're gonna go in handy, or they're gonna help you in trading while least we are doing what we call price action. All right, so it's a must to know all these reversal patterns. That's where the market reverses. Okay, these reversal patterns happen in all the phases, right? We have to look out for them in the three phases of the market, which is the bullish market, the bearish market, and the ranging market. We need to look for those reversal patterns to trade. Okay, those are what we call confirmations for us to enter into the market. We don't just enter into the market just because we like it, but we enter because we need to catch the reversal of the trend. Okay, so for example, when the market is moving upwards like this, okay, when the market is moving upwards like this, when the market is moving upwards like this, I so wish MT5 could just upgrade their tools to just have like one tool where I could just be drawing these these diagrams easily by just using one. Alright, fine. So this is just like the bullish market, right? So how do we anticipate that the market is gonna go down all the way? We anticipate that by knowing types of reversal patterns. So what are those types of reversal patterns? The first one that I'm going to show you is what we call a double top. Okay, a double top, or aka M setup. Okay, they come in variation, guys. They come like this. Some of it come like this. Okay, not so perfect, not so perfect, just like a first grade M. Usually for those who got kids, or for those who've got little brothers and sisters, check how they write their M's. They're not really, they don't have like the accurate levels of the tips. Okay, so they are not really that perfect, but they are all viewed as the same. They all signify the same thing. They all imply the same thing. Okay, some variation of these are like this. Okay, but all these are just one thing. Okay, so don't get it twisted, don't get confused. This is what we call reversal patterns, right? This is what we call an M setup. Okay, double top or just irregular M setup, right? So how do we tell that the market is about to go down? Okay, do you see these lower lows? If this market comes all the way down and does something like this, this implies that this lower low has been violated. As you can see, guys, the market has been moving upwards. Okay, upwards, making some higher lows, higher lows. Now look at this low. This low has done something like this. This low has done something like this. It has breached this low. Okay, it has breached this low. What do we do if we have seen something like this? This simply signifies that the market has finished its momentum to propel moving upwards. Okay, the market wants to go down and to create something like this. The new trend would be signaling us that the market is about to do something like this, guys. Okay, we now know this. Why? It's because this low has been disregarded by this low. Okay, so we now know that the high which is gonna come won't actually break this high. Okay, So how do we trade the market like this? Okay, again, guys, let me do this again. We use the resistance. Now for those who don't know how the resistance topic is all about, just go back to the last videos and I'll explain how I'll be using some resistance. So now the resistance, again, we put it right about there. Let me introduce the new term, which is what we call a neckline. Okay, this is a neckline. What is a neckline? The neckline is this point. Okay, this point. Okay, that's the neckline, the pivotal point. Okay, now that's the neckline, right? So you put this zone right about there. If the market breach with the bearish candle, strong bearish candle, again, as I told you, we've got 2 entry points. So you sell in anticipation that the market will move like so and fill up this gap. Okay, this gap. So the market, you're anticipating that the market will move right about there. You can even take your partials, it's fine. Or you can, because your stop loss right about there, remember your stop loss is above a bit, something like this. Or you can wait for the pullback until the market comes back in that zone right about there, or close to that zone. If the market is showing any signs of failing to breach this level, or maybe just putting some candles with more wicks, is showing that it's failing to breach this level, so you can sell again, and you can just put stop loss right about there in anticipation that you want to catch these big moves, right? These big moves. Okay, so you can take actually your profits right about there. So this would be 1:5, 1:6 trades. And what's the good thing about trading these type of trades, rather than just catching the market? Like, for example, remember on the last videos we were trading these type of setups, right? Whereby when the market just breached this level, we're gonna just trade and we just exit out somewhere there. Again, we do the same thing. If it's something like this, we buy, put our stop loss, we trade something like this. Now the good thing about trading these trend reversal, right? These ones that I've been showing you, they are called continuation trends. Okay, continuation trades. This is no longer a continuation trade. This is now a trend reversal, meaning that if you are to catch this nice move, right, put a stop loss right about there, you're gonna catch more big moves going down, because the market will come up and then it fails to have more momentum, and then it goes all the way down, So this is more pips, guys. This is more money, more pips. Okay, this is more money, more pips. How can you tell that the market wants to go up all the way? Now, the only way to signal you to go out of this trade is when the market does something like this. Okay, when the market moves like this and comes all the way up and breaches again this level. This signals you that, okay, fine, since you have seen something like this, it's better to walk away. Take all the money from here. Let me just show you. Take all the money from here to here. That's what it means. Okay, because according to price action, we now know that the market signals that it's about to go up. The trend is about to change. I'm not saying that the trend will change just because this high has been breached. I'm not saying that, but it signals you that it's about to change. Sometimes the market does, okay, what the market does is, sometimes the market does it does this, right, and carries on going down all the way, okay, and does something like this. And as for me, I would have been out, okay, because I would have entered there, and if I see this signal, I'll go out. Why do I go out? Because the market is not my friend. The market does what it wants. Why? Because I would have trace this whole move, and I would have seen how this move would have been moving upwards, and I just copy whatever happens there to whatever happened down there. So according to my previous analysis, it shows that the market really respects these kind of ways. Like the market, if the market comes and puts and presents us with these reversal patterns, which is either this one or this one and this one, like so. So I don't have a reason why I should be still holding this trade, because this can simply repeat itself, right? This thing can inversely happen like this and carries on going up all the way. So I won't risk, rather just take out my profits. Okay, so simply this is how you trade some M setups or these type of reversal setups, right? So on the next video, I'm gonna be showing you some other types of reversal patterns and how to trade them. Okay, and for sure, this M setup is actually again could be presented like this inversely. The opposite is true, guys. The opposite is true. I hope we are all intelligent enough to know that the opposite is true. Okay, the opposite is a double bottom or the W setup. The opposite of M is W, by the way. So don't get it twisted, guys. Don't get confused. Okay, don't get confused, because we don't want confusion when we now going to the candles, to the actual candles. Okay, we want everybody to be on board, because I'm gonna first do this, as I said, in 2D dimension to explain each and everything, because a lot of people don't understand when we just open some candles right away and we just scare them away. So we don't want to scare people. All right, so this is what I'm talking about, guys. This is the same thing that I'm talking about. Okay, let me just choose any, yeah, like this. So this thing happens usually where the market reverses, right? So yeah, okay, so that's it, guys. So the opposite is true, right? So catch me in another video. I'm gonna be explaining more on that. Okay.